This is the New York session, and we started our challenge, the whole this series where I'm teaching you guys step by step how to trade on a live account. We started the whole series during the London session, and on this session we've already taken a total of 11 trades. So please, for you to be able to understand everything that is going on, you need to watch the first video, which is about the whole strategy we're going to be using, or the whole strategy we are using on all this series. After you've watched that first video, the second video is going to be episode 1 of the whole series. You need to also watch video number 2, which is episode 2, and then this is video number 3, or this is the last video you need to watch, which is episode 3. So if you want to find the links of all the previous episodes and the first video you need to watch to understand the entire strategy, you can check the links on the video description. And if this is your first time watching my video, if you've been watching and you haven't subscribed, smash that subscribe button to subscribe to my channel so that you can always be updated anytime I come up with awesome content like this. So as always, we're just continuing from where we ended, and from where we ended last time, I just checked, and for the 11 trades, we are still down a little bit by almost about $10. That's almost about 2% of our account, and we're just going to be continuing. So as always, we open the higher time frame to confirm the market direction. We can confirm the market is selling on the higher time frame. That's the first thing we've confirmed. And then on the lower time frame, it has to be doing the same thing. Is the market selling on the lower time frame? No, you can see the market is not selling on the lower time frame. And the tools that are helping us to know if the market is buying or selling on the lower time frame or the high time frame is just these two exponential moving averages with period 10 and 23 applied to the median. So the first video, like I explained, is going to teach you in detail why we are doing what we are doing here. All right, good. So let's just quickly come here, and then we can see on gold that the trend on the lower time frame is not confirming the trend on the high time frame. So we need to quickly go to another currency pair. Great Britain pound USD, we can see the market is buying on the higher time frame. So on the lower time frame, we just want to confirm if the market is also buying. All right, so the market is also buying on the lower time frame. So we're just waiting. If this market can push a little bit somewhere here and produce a sell signal and produce a buy signal, then we're going to be getting in somewhere here. So let's just wait and see. So that's why I'm going to keep this one here, because we're waiting to see what happened. And then let's go to USD JPY. USD JPY, the market is obviously buying on the higher time frame. So on the lower time frame, we want to confirm if the market is doing the same thing. All right, on the lower time frame, we can already confirm the market is actually selling, because you can see there's actually a cross right here. Can you see this? There's a cross right here, so we can actually take a trade on USD JPY. Let's quickly go to Euro USD. Euro USD, on the higher time frame, we can confirm that the market is buying on the higher time frame. Let's quickly go to the lower time frame. We need to confirm if the market is also buying on the lower time frame. Voila, the market is buying on the lower time frame. So we are waiting for the same thing, for the market to push somewhere here and give us a buy signal. Or in some cases, if I want to be able to quickly get into the trade, so long as I already see the candle approaching this area, I can just go in like what I want us to do on this pair and buy. My stop loss is going to go somewhere here. All right, but the rule of thumb, you wait for the market to push back to the fast moving average, or between the fast and the slow moving average, and then you can buy. All right, so most of the time I buy here just because I've seen candles like this hundreds upon hundreds of times, where you get this pushback and the market boom just push and go immediately in your favor. But guys, be conservative, wait for the market to push back to the fast moving average, or between the fast and the slow moving average close, produce the first bullish signal before you can get in. Can you see what I was saying? This is where I get in, and the market boom is already pushing in my favor for almost about 4 pips. So I can just quickly modify this position, and to modify, you open your trading terminal, you just click on the trade you want to modify, go to modify. This one, I want us to be able to risk 7 pips, all right, 7 pips, same as 7 points, and go for 14 pips, which is the same as 114 points. So this is our stop loss, this is our take profit. Boom, that one is done. Let's quickly go to Great Britain pound AUD. We're going to close this for now. Great Britain pound AUD, we can already confirm the market is selling, because you can see these two moving averages sloping down with the fast moving average below the slow moving average. So confirming the market is actually selling, or the red moving average above the blue moving average. The opposite would be where the market is actually buying. So on the lower time frame, we just want to confirm if the market is also selling on the lower time frame, which is actually a lie. On the 5-minute time frame, the market is doing the opposite. So there's no trade we can take here because the market is kind of like not balanced. Liquidity is not balanced. So there's no trade we can take. Great Britain Pound card, we can confirm the market is buying on Great Britain Pound card. So on the lower time frame, which is the 5-minute time frame, we have to confirm if the market is also buying. Voila! You can see this, the market is also buying. So what we are just waiting for, it see this trade we planned the other time. Remember, we got in here when the market was here, and I told you guys I'm just waiting for the market to push somewhere here for us to get in and see what happened. The market pushed somewhere here and boom, immediate. So if you would have gotten into this trade somewhere here, risk about 9 pips and go for a risk to reward of 1:3, then you would have already been out of this trade. So what is the best thing to do now? So the best thing to do now is just to wait for something like this, where the market push back to the fast and the slow moving average, close, and then give us the first bullish candle, and then boom, we're gonna get in immediately after that, just somewhere here. All right, so we're waiting for something like that to happen. So we're just going to keep an eye on Great Britain Pound card to see what's happening. Great Britain Pound JPY, on the higher time frame, we can confirm the market is actually buying on the higher time frame. On the lower time frame, we need to be able to confirm if the market is also buying on the lower time frame. Let's see. Boom, you can see there was a cross here. The market is also buying on the lower time frame. So what we need to wait now is for the market to contract back to our fast moving average, or between the fast and the slow moving average, then close a bullish candle, and then we buy. So again, we're going to keep an eye on that currency pair. All right, so in most cases, you just have to be able to have a plan, and you only take a setup that align according to your plan. So that is that. Let's go to Great Britain Pound JPY. If we can drop our indicator here, we can see it's not there. We can be able to confirm Great Britain Pound NZD is actually buying. Let's see, 5-minute is also buying. 5-minute, are you buying? Let's drop the same indicator. Boom. On the 5-minute, we can confirm a buy. So the same thing, we're just waiting now for the market to push back to the fast, or between the fast and the slow moving average, then produce a bullish candle, and we're going to buy from there. So we're waiting for that setup to occur. Good. Then let's quickly go to a Euro AUD, right? On Euro AUD, let's see if let's put this one. Euro AUD, we can confirm that the market is selling. You can see the two candles haven't crossed. The blue hasn't crossed the red, so there's still a confirmation the market is selling. This just sounds like a double bottom, but there is still a confirmation. The market, the structure hasn't been changed yet, so we are still selling on the high time frame, or on the 4-hour time frame. Remember, that was a 1-hour time frame. 4-hour time frame, we are still clearly selling. So let's go now to the 5-minute time frame to see if the market is also selling on the 5-minute time frame, to see if the market is selling right on the 5-minute time frame. So on the 5-minute time frame, the opposite has happened. The market is instead buying on the 5-minute time frame. So there's nothing we can do here until the trend has changed, right? Until the trend has changed on the high time frame and giving us a buy before we can do anything. Euro JPY, let's see what's happening on the high time frame, 4-hour time frame. The market is buying. Let's see what's happening on the 5-minute time frame, if the market is also buying on the 5-minute time frame. On the 5-minute time frame, voila, the market is also buying. The market has just pushed back to our slow and the fast moving average close, give us a bullish signal, and then we're going to be buying right there. Voila, that's a buy trade right there. And then we're just going to quickly go there, click on modify. We'll open our trading terminal, go here, go on modify. You can see the first trade is in deep profit as we speak. So we just quickly go on modify. This one, we're going to be risking 5 pips to go for 10 pips, right? A risk to reward of 1:2. 10 pips is the same as 100 points. 5 pips is the same as 50 points. So this is our stop loss, and that's our take profit. So we can just extend our stop loss a little bit, and then anytime you touch your stop loss, you need to increase your take profit, just so you can have the risk to reward of 1:2. Perfect. Now let's go to the next one on our list, which is Euro card. On Euro card, on the lower time frame, we can confirm that the market is, voila, drum roll, we can confirm that the market is actually buying on the higher time frame. Then on the lower time frame, let's see what's happening on the lower time frame. Let's just go here, drop our indicator again. On the lower time frame, is the market buying? Yes. So any pullback right to this particular area, then give us that structure, we're going to be getting in. So we're going to come back to watch what happened on EuroCAD. Perfect. Now AUD USD is something we talked about, but we haven't actually taken a trade. On the 4-hour time frame, AUD USD is buying. Let's see what's happening on the 5-minute time frame. 5-minute time frame, is it buying? Yes. We just got a cross here and this pullback right here, and it's already giving us a buy signal. So we would have waited for the market to close, give us a blue signal or a blue candlestick before we can buy. That's the best way to go. But since, because I want us to be able to see these setups, let me get it in somewhere here, modify my position, and then we go from there. So I'm just going to quickly modify this position. That's AUD USD to, I'm going to be risking obviously 4 pips. I'm not risking much. 4 pips to go for 8 pips. All right, to go for 8 pips or 80 points. Voila, that's my stop loss, that's my take profit. Let's go. Good. So with that, let's go now to another one we had here, which was CAD JPY. CAD JPY, we can confirm the market is in a deep uptrend on the 4-hour time frame. 5-minute time frame, we just want to confirm if the market is also buying on the 5-minute time frame, which is the market, it hasn't crossed it hasn't crossed yet. So we need to wait for the cross to actually happen. By the close of this candle, it's actually going to cross. So we'll just wait for a pullback again before we can get in. Because we can get in, meanwhile, the pullback is going to happen. It's going to trigger you out of the trade, and boom, just continue going in your direction. So that's what we're going to wait. And then US Tech, which is NASDAQ, on the 4-hour time frame, we can confirm the market is selling. The market is selling on the 4-hour time frame. And then on the 5-minute time frame, is it also selling? Let's see if the market is also selling. Okay, we can confirm that the market has just crossed and it's also selling. So we can have a pushback like somewhere here, and then we are expecting something like this to happen, where the market pushes somewhere here, and then boom, continue going down. All right, so that's what we're expecting on NASDAQ. Let's go back to these ones up here, since we didn't actually find a setup last time. This one is buying on the 5-minute time frame. Is it also buying? Has it crossed to buying? Has it crossed to buying? Yes. And this pullback was what we were waiting for, right? So we still have to wait, guys. It's not yet a good time to get in. You still need to wait. We're waiting for a pushback right to this particular area right here. So waiting for a pushback to this particular area, then we can get into the trade. So just be patient. Just be patient. You can see what's actually happening. Actually happening. So guys, exercise some patience. Then we had a pending trade on Great Britain pound USD on the 5-minute time frame. We're waiting for a pullback on the 5-minute time frame, which is the same thing here. So this one, since I want us to be able to, I can already get in on this one. Then I go to my trading terminal to be able to modify that one, so we can easily modify this. Go to modify this one. I want to be able to rig 6 pips. No, not that one. Great Britain pound USD. I can be able to modify this. Put this on 6 pips, and then this on 12 pips, which is on 12 pips, not 1 point. This, so 12 pips is going to be 120. Good. So that's my take profit and my stop loss on that one. Let's quickly go to. Okay, let's quickly go to Euro JPY. There was nothing. USD, Euro USD, there was something. The market was actually buying, and we're waiting for the same thing to happen on the lower time frame. I think we already had a trade on this. Yes, we had a trade already on this. You can see it's already there. Another one we were waiting was this pair, which was Great Britain pound CAD. Great Britain pound CAD, we're waiting for this pullback right here. So it has almost happened. So we're just waiting for it to close bullish, which is we can get into the trade as we speak. 0.25. Remember, I want us to be able to get into trade, but most of the time you wait for the market to push back here, close red, and then you wait for the first bullish candle. It needs to close bullish to confirm that the buyers are getting into the market before you can buy. But since I want us to be able to get to our sample size of at least 20 trades, I'm taking the risk to get into the trade earlier. All right. So I get a buy. I just got a buy on that one, and then okay, we're already out of the trade on one. We're already out on one trade. So Great Britain pound CAD is this one. So this one we're going to be risking. Let's see. We're going to be risking. Let's go for 6 pips, and we're going for 12 pips. As easy as that. Good. So that one is also placed. Which one were we also waiting? Great Britain pound JPY. We had a trade. No, we're waiting for a pushback. What happened? Good. We're waiting for, is the market buying on the lower time frame? If it's buying on the higher time frame, then that is already a setup I'm seeing. Is it buying on the higher time frame? Is the answer yes. So that's a buy signal on the lower time frame. So on the lower time frame, we're going to be buying. So we're going to be buying here, and then we quickly modify. Then we put our stop loss. This one we're going to be going for 7 pips, and then we're going to be targeting 14 pips. Voila, good. So that's a total of almost about 7 trades combined with the 11 we took during the London session, making us almost about 18 trades. So we're going to come back after an hour or two, and we'll be able to see what has happened with all the trades. And within that period, I should be able to add 2 more trades so that we can have a total of 20 trades. We'll come back now and do the analysis together to see what was our win percentage. Do we have a 30% win rate, a 40% win rate, a 50% or a 60%? But from the looks of things, it's looking as if we're going to have a 50% win rate or a 40% win rate. But best case scenario or worst case scenario, even if you have a 40% win rate, we're still going to be making money. Why? Because we are only going for a risk to reward of 1:2. We are risking 1% per trade. Remember, you must have followed the previous episode, right? That's why we are fast on this one. We're risking 1% per trade. And if we have a 40% win rate, it means 40% of 20, it means we're only going to have 8 trades that are going to be winners. So 8 times 2, we're going to have 16%. And then 60% are going to be losers. So 60% of 20 trade is going to be 12 trade. So 12 trade, we're going to lose 12% because we are risking 1% per trade. So we're going to lose 12% and then make what? And then make 16%. What's the net per day? The net per day is 4%. 4% gain, even though we had the biggest percentage that was losers. With the day was a bad day, people came to, you saw me, most of my trades were losers. At the end of the day, I'm still up as a winner because I'm seeing worst case scenario, the results is I'm going to have a 40% win rate, and that is going to be 40% of my small $1,000 account in one day. If you are trading on $100,000 account, 40% would have been $4,000. If you are trading on $1 million account, I used to trade on 5 million sometimes, 4% would have been 40,000 francs if you are trading on 1 million. So trading just becomes a game of numbers when you know what you are doing. So let's come back after an hour and I'll be able to show you guys the results and we'll be able to analyze and also show you guys more about trading psychology.
12 sleepless hours later.
It's been almost about 12 hours and we are back on our screen. And remember, yesterday, before we left yesterday, we had a total of 5 trades that were up and running, right? To make a total set of our 20 trades. Because remember, the whole of this episode, I want us to take a total of 20 trades. So that no matter the number of trades we have as losers or as winners, we'll be able to know how, as a profitable Forex trader, we are able to manage both winners and losers. Whether you've been trading for 10 years or for 1 month, you're going to have losers. But how do we, or why do we still stay on top of the game? Why are we still on the top 1% of people who are making money in Forex trading? The answer is simple, because we know how to manage our losers. We leverage from our winners and we learn how to use the weaknesses on our losers to be able to make better decisions tomorrow. As a Forex trader, there's nothing like a loser. It's either you learn or you earn. If a trade is not a winner, you will learn from that particular trade. And if a trade is a winner, you earn from that trade. So that's why I'm saying as a profitable Forex trader or as a top 1% of the trader, you can only do two things, learn or earn. There's nothing like a loser when it comes to a profitable Forex trader or when it comes to the top 1% of people who trade Forex. So out of the 5 trades we had yesterday, if you can see on my screen, this was one of the last trade, which was on Euro USD. We got in here because remember, we're using a moving average, simple moving average strategy, and on the high time frame we're buying, on the lower time frame we waited for the market to pull back, and since we're heading, remember, see why I said you need to be able to wait to see the first closure of the candle. Normally we're supposed to get into this trade somewhere here, but I got in here because I wanted to be able to take all the 20 trades before I could close my computer, right? And when I got in here, you can see the market continued pushing back, and the only sell signal, the only buy signal came in somewhere here. But we were safe. We were safe because I was risking 7 pips. So if I can measure from here right down to here, the market went against us for about 5 pips, but my stop loss was here, and you can see went in my favor and hit my take profit on 14 pips. That was sweet. And if you can see on my phone, I'm just going to put a recording on my phone so that you can also see how the trades play out on my phone. So this is the same trade on my phone, as you can see, because this trade was we're using 0.25 on our $1,000 account, because we're only risking 1%. 1% of $1,000 is $10, right? 1% of $10,000 is $10. So we're just risking $10 on this particular trade, and we made 3%. $35 is almost about 3.5% of our account in one trade. If we're using $100,000, you'll be making about $3,500. That's what I'm saying. Trading just becomes a game of numbers once you already know what you are doing. After that, we had this other trade, which was on what? This trade was on AUD USD. So if you can come here on AUD USD, this is the trade right here. Now let's just quickly go to the 5-minute time frame so that you guys can see. So this is the trade on AUD USD. Where is it again? You can just go behind. We'll be able to see it plotted on the chart. So don't worry, guys. Don't worry. I just need to scroll back to where we have the trade. Okay, good. This was the trade. I like this. So we're struck out of the trade before this thing even happened right here. So we got in right here. We were risking almost about 5 pips, I guess, and then we went for 8 pips. So we're risking 4 pips to go for 8 pips, and so we're risking $10 to go for $20, and you can see on my screen we hit our take profit. The next trade now, the next 2 trades were Euro JPY and Great Britain Pound CAD, and all those 2 trades were a loser, and this is what happened. Great Britain Pound CAD, I'm just going to quickly open the 4-hour time frame, and Great Britain Pound CAD on the 5-minute time frame. Let's see. I'm just going to put auto screw on off so that it doesn't keep jumping to the start, and we're going to see it plotted. We're going to see the trade plotted on the screen, right? Good. So the trade plotted on the screen is right, this one we're seeing right here. So we bought here, and unfortunately the market didn't go as planned, and we're struck out right here on -5 pips, so we lost 1% of our account. The same thing happened on Euro JPY, and we lost 1% of our account. And in total, out of the 20 trades, these are the total stats. We had a total of 12 losers. So our win rate percent was just I'm just going to quickly close this. Now these are the total stats of the 20 trades. Unfortunately, we had a total of 12 losers and only 8 winners, meaning we had a win rate of 40%. Why do we have a win rate of 40%? Remember, most of the times I was just heading to take most of these trades because I wanted a sample size of 20 trades. So most of my entries were not sniper entries. But worst case scenario, we ended up with a win rate of 40%, 8 winners and 12 losers. So let's do the math. Out of the 8 winners we had, remember, let's start with the losers. We were risking 1% per trade to go for 2%, risk to reward or 1:2. Meaning out of the 12 trades that were losers, we lose a total of 12%. So we're already down on our account with 12% for that day. Then out of the winners, we had a total of 8 winners. Each winner we have 2%, meaning 2% times 8, we made a total of 16%. So what was our net for the day? Our net for the day was now the total we made minus the total we lose. All right, so we made a total of 16% and we lost a total of 12%. So 16% minus 12%, we ended the day with plus 4% of our account. That's why if you can see on this particular screenshot, I'm going to try to put a screenshot. We have a total of our $1,136 dollars, and we started the challenge with about $1,100 and something dollars. So the gain of almost about $36 is the 4% we made. I remember we're paying spread, we're paying commission. That's why 4% of our $1,000, we had almost about a profit of about 30 something dollars. So in a bigger account, 4% gain, you'll be having about $4,000 on maybe like a $100,000 profit account or a $400,000 profit account. 4% gain, you'll be having about $16,000. You see. So with this, that has come to the conclusion of the series. And what are some of the lessons we've picked on this particular series? First lesson we've learned is you don't need to win all the time. You don't need to have all your trade as winners to be a millionaire in Forex trading. All right, that's the first lesson. You don't need to win all the trades to be a millionaire in Forex trading. You can see from this example, I had 12 of my trades were losers and only 8 were winners, meaning I had a win rate of 40%, but I still ended up a millionaire. I still ended up making money. Second lesson was for you to be able to have a plan and trade a plan. All right, have your plan and trade your plan. Because I always say, analyze like a pro and execute like a robot. Meaning when it comes to analysis, take your time and analyze your trade very well. But when you see the setup and it has already followed the rules on your trading plan, execute that trade without second guessing. That's the next lesson we're able to pick on this particular trade. Then the next lesson we'll also pick on this particular series from the first to the third series was you need to be able to know that the lower the time frame, the quicker the trades you're going to have and the more noise you're going to face. Because we're trading on the 5-minute time frame and you guys saw the noise we had in the market. So if you're someone who is more conservative, you don't have the time to be looking at your screen, I'll advise use the same strategy but trade on the 1 hour time frame. So if you're using the same strategy and you're trading on the 1 hour time frame, just use the 4 hour time frame as your time frame of reference and then go back to the 1 hour time frame to make sure the 1 hour time frame is in accordance with the 4 hour time frame. Meaning if the 4 hour time frame is an uptrend, the 1 hour time frame must be an uptrend. If the 4 hour time frame is a downtrend, the lower time frame, which is the 1 hour time frame, must also be a downtrend. So with that being said, those were the lessons we were able to pick throughout this entire series. And the last lesson is just to show you this strategy works, all right? And if you can make just 40%, if you can have just a win rate of 40% or 50%, you will still be making money. Even if you have a win rate of 30%, you will go break even, all right? So meaning if 30% of all your trades are, if 70% of all your trades are losers and just 30% is 30% of your trades are winners, you in best case scenario, you will go break even. And another lesson, the last lesson for this particular series is always go for a trade that has a risk to reward of 1:3. Never press buy or sell on your computer if the trade doesn't have a risk to reward of at least 1:3. That is very, 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 very important. All right. So with that being said, guys, I'm going to try, maybe if I have time next week, we'll try to do the same series 1, 2, and 3 on now the 1 hour time frame where we can be able to place the trade and only get results after 2 or 3 days to actually see how it plays out. Maybe we can do that for a series of 10 trades instead of 20 trades and we'll still be able to document everything. Thank you guys so much for watching. If you want to follow a tutorial that I've been able to make or a full course that will teach you from A to Z on how to make millions in the Forex market, make sure you enroll below in Godlove University where I will be able to mentor you one-on-one on how to win in the Forex space. If you want a robot that will be able to analyze and give you the same signals we were using yesterday and also automatically trade for you if you prefer to do so, check out EP3 Pro, which is the most viral and the most profitable Forex robot you can always check the link on the video description. If you want my recommended pro firm where you can trade up to $600,000, if you want my recommended brokers, my signal service, check the link below to enroll on all those services and to use those recommended services, and I will see you guys on this other previous episode. Peace.